Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
And obviously next week we have John Person presenting on predicting price moves for the currency markets. So definitely join us for that. And so once again, on behalf of everyone, I wanted to thank Jack for presenting. This was really a very important topic, and I think you provided a lot of interesting insight. So let me know if you have any questions at all. Feel free to send us an email at ask@fxoptions.com. And if you want to contact Jack Crooks, I think you'll be able to see their website once you leave the webinar. So that should make it easier for you.
I can answer some of the questions. It doesn't look like there's too many. Okay, Lynette?
Yeah.
Okay. Question was U.S. dollar, Canadian dollar view was one of the questions, my opinion. You know, the Canadian dollar continues to lag the other of the major currencies. It lags in here for some reason, and maybe that is about yield, and maybe it is about the U.S. being a little close to Canada and some of the troubles possibly spilling over the border. But on a relative basis, if this momentum continues in here, we think we still like the Canadian dollar, because you have to at least keep in mind, even though some of the growth numbers haven't been great in Canada, they've surprised on some things, it surprised negatively on others. You don't have the degree of problems in the financial system in Canada that you have in the other countries, Europe, UK, US. So we think the Canadian dollar in here should, let's say we think it should play catch up in here on a relative basis. Seems undervalued to the other commodity currencies, especially as this momentum move on growth continues. Other question is, what is the safest currency in the world? Sadly, there probably is no safe currency in the world when you think of the fact that they're all backed by faith from U.S. from governments that really we can't trust when they have the purse strings and they use them the way they are. I guess you could say gold is really the safest currency in the world on a relative basis. If the dollar continues down, gold plays that mirror image role and has to maintain its purchasing power. And obviously, I think that's part of the move you've seen in gold. People around the world are afraid of these currencies, no matter who puts them out. So I definitely think you'd have to say gold if you had to come up with a relative currency here, even though it's not a currency per se. Another question: will most countries benefit from China's growth? Which countries benefit most from China's growth? Obviously, the commodity-based countries that dig the stuff out of the ground and have to ship it to China, they benefit in a very big way. Those countries that have natural resources that get China investment are starting to benefit in a big way. We've seen them in Asia, across Asia and Africa is starting to improve some of those economies because of China's search for natural resources. If China actually starts to grow internally relative to the numbers, which we haven't seen yet, although they've hit their GDP numbers, we haven't seen a real self-generating domestic demand. But if we do, the Asian bloc's current countries, obviously Japan too, tend to benefit the most because they're shifting their export component more and more away from the industrialized world into China. So China's growth, I guess you could say, is benefiting a lot of different places. But in the near term, we think the commodity countries obviously first, and some of the Asian bloc countries that are still coming out of recession, and which is another reason we like the Asian currencies overall. If China does create some internal demand, that's going to quickly lift those Asian bloc countries, especially countries like Thailand, quickly out of recession could be very, very good for the country, very, very good for the currencies. Other question is, tell me how weak the U.S. dollar will come. Hard to say how weak the U.S. dollar will be. The main support we're looking at now in the U.S. dollar index is right around 70, and that was the March low, and that's the all-time low in the U.S. dollar. And from a technical standpoint, sometimes when you break through these lows or highs, when there's no support or resistance left, you tend to get a spike down. So it's hard to say how low a low is. But again, from a fundamental standpoint, if you're a person like me, but then again, given my track of late, but I don't think the U.S. dollar is going to go away. I don't think the U.S. is going to lose its reserve currency status, and the U.S. is still going to be the major player in the world on the financial side of the fence. I think sooner or later the dollar is in a position where it's going to just be so undervalued, we're going to have to see some type of rebound. And unless you totally write off the U.S. economy as just dead in the water for many, many years, and that thought is in people's mind again, but if unless the entrepreneur is really destroyed in the U.S. and we see some type of change on the technology front, we think the U.S. is definitely going to rebound at some point in here, and the dollar from a longer term, again, fundamental basis is looking cheap. Not to say it can't go lower, and not to say it can't overshoot on the downside. So be very careful when I say that.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.